My name's Patrick Sargent. I'm a registered tax agent and chartered accountant, and I'm the director of Lawpath Tax Advisory. One of the most common questions we get as accountants is what is the difference between a sole trader and a company? And should I trade out of a company or a sole trader ABN? Today, I'm going to go through the key differences and what you need to consider if you're choosing between a sole trader or a company structure. Firstly, a company is a separate legal entity. You'll set up the company separately and it can be sued, it can sue. It's a separate legal entity and it will report its income, expenses, and its taxes separately to you personally. This is different to a sole trader. A sole trader is where you get a personal ABN and it's attached to your TFN. What that means is you're essentially trading as yourself and your income and expenses are reported in your personal tax return. The company structure is a little more complex, there's more requirements, it's a little bit more expensive, you'll pay an annual ASIC fee to have a company, and as a director, you'll have certain obligations you'll need to understand and do each year to maintain compliance. You'll report your income and expenses in the company in a separate company tax return, and you'll have a set of financial statements separate just for the company. For the sole trader, you report your income and expenses in your personal tax return. This is the key distinction between a company and a sole trader. The tax rates are different. When you're considering a sole trader versus a company, the company tax rates are capped at 25%. Individual tax rates are progressive and they go all the way up to 45%. That's a 20% difference in the tax rate. It is much more tax efficient to operate out of a company depending on the size of your profit and income of your business. Asset protection is another key factor when looking at sole trader versus a company. If you operate under your personal ABN, you can be sued and your personal assets are at risk. Operating under your personal ABN doesn't give you much protection. Under a company ABN, the company can be sued and your personal assets can be a little bit more safe. So a company structure adds a little bit more protection than operating out of your personal ABN. There's also a number of government grants and incentives that are only available to companies. So if you're operating out of a sole trader ABN, you might not be eligible to receive certain government grants and incentives that you otherwise might have been able to receive. A company is great for flexibility of ownership as well. You might want to sell part of your business, you might want to raise capital to grow your business. Having a company structure provides a bit of flexibility around the ownership. A sole trader, you can't fractionalize the ownership. It's just you owning the full business and you're reporting the business in your personal tax return. If you need help choosing between a sole trader or a company, click the link for the Lawpath Business Structure Quiz.